What is going on, investors? Hopefully you guys are doing well out there. It is time for earnings season, and we're going to kick things off like we always do with JP Morgan Chase. The company reported their Q4 earnings before the bell today. We'll get into them. We'll take a look at the revenues, the profits, all the different business segments, and some of the key data that we're seeing with these bank stocks. I tell you what, you follow these bank stocks for a number of different reasons, but primarily we get a window into the consumer, and right now we're actually getting a window into the Federal Reserve's policy and how that is impacting and the impacts it's already making. Over the last year, the stock's down about 16.5% year to date, which is really not that long, up about 4% over the last 6 months. This stock has been in rally mode, up over 25%. And on the heels of reporting their Q4 earnings, the stock actually traded down. It was down close to 134 earlier today. Now it is rallying. I am recording this about 8 o'clock a.m. Pacific time, so we've got many more hours, but it's up about 1% after reporting these Q4 earnings. Revenue came in at $34.5 billion. That was a whopping nearly 18% increase year over year, and it beat expectations by a couple $100 million. Expectations was right around $34.2 million or billion dollars, excuse me. Now, upcoming quarters actually look pretty good from a kind of a year over year growth perspective on that revenue side. 35, that would be kind of a mid-teens grower for the upcoming quarters. Then when you start looking out towards the back half of this year, you're going to kind of contract back down to kind of single digit growth over at JP Morgan. Now, we also got a little bit of a guidance for the full year kind of interest expense or the expense side that the company is expecting. Last year, they spent about $76.1 billion on non-interest expense, essentially running the operations, running the company. This year, expecting about $81 billion. So that might have some investors concerned a little bit right off the top. The fact that you're only projecting 2 quarters of relatively strong growth, and then towards the back half of the year, you're going to flatten out a little bit, but you're going to increase your operating expenses by about $5 billion. Now, let's jump over to the segment results. So we got corporate-wide JP Morgan. You have that $34.5 billion worth of revenue. Again, that was about 18% growth year over year, and even quarter over quarter, you grew that by about 6%. Now, here's the impressive thing over at JP Morgan. Here's your non-interest expense line. It actually declined quarter over quarter by 1%, and year over year, just up 6%. So when you grow your revenues 18% and your expenses just 6%, well, you're going to expect your net income to really start to fly. But there is that all-important provision for credit losses that these banks, what they do is they take some money and they set it aside just in case some people start defaulting on their home loans, their car loans, their credit cards. And what we're seeing in the most recent quarter is some dramatic increases there. Quarter over quarter, 49% increase from $1.5 billion all the way up to nearly $2.3 billion of provisions set aside by JP Morgan. Now, they've got experts and PhDs and probably computer algorithms in the back projecting how people are going to pay their bills, pay their credit cards, and in this case, not pay their bills. And they are projecting much higher than they did in Q3. And you look a year ago period, remember doing these videos, they were actually taking money out that they had set aside, and then they release this into the company, and it really bolsters up net income. So you see year over year, despite strong revenues and relatively nice cost controls, our net income just up 6% year over year. Again, primarily due to the fact that they're setting aside more money because they believe the consumers are going to start to default on their credit cards. And they gave you a little bit of a window into this. Here's your card services kind of 30-day delinquency rates, and they're seeing, here's our outlook. So this is the upcoming year, and they're actually seeing that we're going to get back to kind of quote unquote normal levels. These have been historically low as people got PPP loans, as people got PUA and different types of pandemic assistance, unemployment. So people were paying their bills. Well, those have largely gone away, and so people are maybe struggling a little bit. Here's your card services net charge-off rates. They're expecting these get to back to kind of a 2.6% rate, with again, not quite where you were in 2020 and 2019, but you're starting to get back that level. Now, obviously, this is negative for JP Morgan, but in my opinion, this is actually showing you that the Federal Reserve is is doing their job. Things are getting back to quote unquote normal. That means inflation. That means higher prices. That means this asset bubble is probably going to start getting back to a little bit more normalcy here very soon. Now, let's go through the different business segments at JP Morgan. You got your community and consumer banking. This is your kind of mom and pop banking, direct deposits of your salary and those types of things. Net revenue coming in at $15.8 million. That was 11% more than the previous quarter and a whopping 29% more than the previous period. Where you're seeing some weakness here is obviously in home lending. I mean, that is down 37% quarter over quarter and a whopping 46% year over year. So obviously home lending just falling off a map. Here's where you see a large amount of provisions for credit losses. Obviously you have auto loans here, you have card services, and those home lending. People are going to, a percentage of people are going to stop paying these. And you see last year, they actually took a credit of $1 billion. This year we set aside $1.8 billion. That was 249% higher than the third quarter. So their computer systems and their experts in the back over at JP Morgan are seeing the effects of the economy, and they're saying that people are going to start defaulting and stop paying some of their loans. Here's your corporate and investment bank. Revenues were down quarter over quarter by about 11% and down year over year by about 9% as corporates are doing less activity from kind of a buying perspective, from a borrowing perspective as well. And so that's going to hurt the business just a little bit. Your provision for credit losses far less in this business unit. In fact, it's just a rounding error. Your net income, though, down 27% year over year, again, as the corporates kind of pulled back due to higher interest rates and those types of things, and even the general economy. Your commercial banking, your revenue was up nicely, 12% year over year on a quarterly basis and 30% year over year on a yearly basis. Provisions for credit losses up year over year, but actually down a little bit quarter over quarter. So that's interesting. Looks like maybe they got out in front of the commercial banking, whereas they feel like they need to play catch up in kind of the consumer banking where they rapidly increase that. Now, finally, you've got your asset and wealth management business. Very, very steady business, up just 1% quarter over quarter, 3% year over year, but churns out a lot of net income off of $4.6 billion worth of revenue, over $1.1 billion worth of net income. That is a very, very strong business. Now, when you come over to JP Morgan's kind of company-wide type of financials, it's in really small font, but there are some important things here. So you've got your tangible book value. If we were to liquidate JP Morgan and just liquidate all the assets and pay all the liabilities and keep all the profits and those types of things, we'd have a value of about $73 per share. So this company trading at $140 per share. Obviously, you're trading at about 2 times tangible book on this one. Your book value per share, which factors in a few other things, values the company at about $90. Now, the most important thing is with that is you really want to compare JP Morgan to itself. Historically, over the last 5 years, paying anywhere over 2 times tangible book, which is what we're looking at today. In fact, we just kind of ticked over that mark more recently with JP Morgan as the stock, again, over the last couple of months is up over 20%. Historically, over the last 5 years, that's actually a pretty rich valuation. And you will see that when we come over here and look at this from a technical perspective as well. Now, I'm looking at kind of a weekly chart, and what we are seeing here is I've got this orange line. We've got, a decade-long uptrend in this stock, and every time it pulls very close to this orange line, that has actually signaled kind of a turning point in the stock and obviously a buying opportunity as well, although it's very difficult to buy these stocks when they pull back to these orange lines. A lot of people think investing is super easy. You just draw on this orange line, and when it gets close, you buy it. Well, you would have had to buy in the depths of the March lows in 2020, and then you would have had to buy back in October when everybody was thinking everything was just going to keep going down and down and down, and Jerome Powell was just going to hike rates into infinity. Well, that hasn't materialized. There is a lot of optimism out there, and this stock has been on a monster rally and a monster reversal. I actually think these are likely the lows for JP Morgan back in October, so you're looking at about 103, 104 on the stock. Now, surprising me is I thought we would get rejected. So the early morning action where JP Morgan kind of did a U-turn this morning, I actually thought, that's actually pretty good. We actually want to see this pull back to this orange line, probably pull back to kind of the mid 100s, 110, 115. You get that stock on this pullback, but no, what we are actually doing is confirming potentially that we'll make higher highs, because just like this orange line confirms, you are also confirming a series of higher highs on this stock. I mean, you're doing it back for the entire decade. There is some deviation, but more recently, we're making high, new high, new high. And as we push higher with JP Morgan, it looks like potentially over the next maybe quarter or two, we could push higher. That would push you above 170 on this stock. That would just absolutely confirm that this uptrend is still intact. This decade-long uptrend is intact. And if you want to play the momentum, certainly you could do that in the shorter term from 140 up to 170. That's not a trade I like. I keep this on my watch list. I'm patient. Stock's already in my portfolio, so I'll experience this upside. What you're looking for is some kind of rejection at this top. Now, if we don't get above 170, if we don't confirm new higher highs, be slightly concerning from a technical perspective, but boy, if you confirm new higher highs, even $1 or two over 170, and then you have this pullback, you should have a stop back here at 140 where the stock is now, even further back again, kind of in that 110, 115, 120 range. These are where you buy the dip. I know a lot of people talk about buying the dip. You actually buy the dip in a confirmed uptrend. Right now, JP Morgan is absolutely 100% still locked in we're talking about a decade long. You probably really stretch this back even longer than that. We're probably looking at a 2-decade long uptrend that is still intact despite all what you see and what you read and a lot of the FUD that gets spewed out. You are still locked in this uptrend. You can still buy the dip. You still got a lot of momentum in this stock, and it is showing you today, as it did a complete reversal earlier in the day. It was at 134 and it's completely reversed around, now up about 1%. And again, over the last 6 months, just been in rally mode at 26% increase. We'll come back again later today with our FANG stock recap show. And obviously the start of the earnings season will continue for the rest of the month. Hopefully you guys have a wonderful day out there and good luck with your investments.